We've never been in a better position than we are today to navigate what appears to be a tough macroeconomic cycle. We ended up raising over $3.5 billion of capital last year to shore up our balance sheet. We now have access to low-cost deposits and funding. We have all of the table stake products necessary to enable our members to get their money right. And it's all coming down to execution for us over the next several quarters and years to realize our overall ambitions.
So just in the past 3 days, there has been so much news that has come out of SoFi, things that I want to share with you, mostly doing with the Piper Sandler interview that the CFO, Chris Lapointe, did with Piper Sandler's analyst, Kevin Barker. So there is just so much that I want to talk about today. So I want to cut out all the fluff and just go straight into the details. But for that, all I'm asking is for you guys to give this video a like and subscribe down below if you want to see more financial content just like this. So I just want to start this off by saying that May 2022 CPI data came out at 8.6% today, or around 1% up month over month. That was way over estimates by over 0.3%, okay, for both year over year and month over month. This is terrible news, okay? This is why SoFi crashed on this Friday and probably will continue to sort of have a bad day into Monday because this was a terrible CPI report. It means that we still don't know where the peak for inflation is, and although we thought we had hit it and we're going to start going down on the downtrend, that just isn't the case because of this May data. And this is a really bad look for the Federal Reserve, and it means that they can be very heavy-handed whenever it comes to, well, how they're going to curve it with interest rates. But now on to what happened on Thursday, which was the Piper Sandler interview with Chris Lapointe, the CFO of SoFi Technologies. And just so you know, Kevin Barker, the analyst for Piper Sandler, currently has a 12-month price target for SoFi at $10 per share. Chris Lapointe actually showed off how much demand is going to be coming back whenever the moratorium ends for the student loan pause, although he did not actually speculate on when that's going to be. Currently, it's set for August 1st of 2022, although the current, SoFi guidance is set for January 1st of 2023, as they are already expecting multiple extensions. And currently, there's around $1.7 trillion of student loan debt with the government, for which Chris Lapointe says hundreds of billions of that dollars could actually be disrupted by SoFi due to the lower rates and people refinancing. One thing to note is that whenever we saw this current CPI data for May, this puts more pressure on Joe Biden to actually increase the student loan pause because it just makes that affordability even further away from the truth. Now, on to the second point that I thought was amazing that Chris brought up was the fact that we were paying around 150 to 400 basis points on our $7 billion of warehouse facilities. This is like a large credit card that corporations use as debt towards their business to fund new growth opportunities. And to make matters worse, those loans are like variable rates in nature, right? So the longer you're actually holding on to them in this sort of macro environment, the more you're going to have to pay to fund the growth in your business. But now that we're a bank, we actually have deposits. So the money that people put in their SoFi checking and savings, we can actually use to fund our own loans in our own business. Chris said that our deposits have actually reached over $2.2 billion as of the time of doing that chat and are still growing of north of $100 million per week. Now, there is a big misconception here and what people on YouTube are still getting quite confused about. The deposits are not free to fund our loans, okay? Because we are giving an interest rate. For people that we have direct deposits for, we still have to pay them the 1.25% or what would be 125 basis points. Or if they're not with direct deposit, we still pay them 0.7% or 70 basis points. Now, although the banking industry is a very flexible one, it also has tons of regulation. So before we had the banking charter, we would get these loans, either student refis or personal loans. We would hold them for about 3 months and then we would sell them off to other financial institutions. This is called securitization. Now that we have the bank charter, we're not only able to fund these loans at a cheaper rate, but now we're actually able to hold them for longer periods of time, which Chris actually pointed out as being around 5 to 6 months on average, which now actually leads to higher net interest income. And what I love so much about the banking industry and why I love this so much is not only are we growing in the amount of members that we're doing, the amount of products, everything along these lines, we can hold the loans for longer, see higher net interest incomes, which leads to higher LTV for our clients. But this business is also seeing what Chris said, the lowest 90-day delinquency rates in our entire company career, as well as annualized charge-off rates of only 1.04%, which is just industry leading. Not only is this amazing for obvious reasons like people paying their bills for us, but this also leads to amazing demand whenever it comes to securitization, like selling our loans to other institutions. Well, if they know that people are going to be paying their bills and we have amazing rates for that, they're going to be paying more to us. And so it's important that we have high demand for that and high-paying customers on the B2B side. Now, in another point, Chris Lapointe also spoke about stock-based compensation, for which he said around 33% of the actual stock-based compensation in Q1 came from performance share units, okay? Now, this was part of the SPAC and part of the deal that they actually signed up for, but this should actually be going away in Q1 of 2024. Now, that should lower, stock-based compensation, but they also said that they're going to be restructuring and lowering stock-based compensation to hopefully get it back into the single digits for their business. So not only will there be a large amount dropping off in Q1 of 2024, but they're also trying to get down to single digits, which should come into the later bits of 2023. Now, whenever it came to profitability, obviously we didn't get the most clear of an answer, but they do expect EBITDA profitability in the financial services sector to actually start to happen in the end portion of 2023. That's also a very important distinction because it's the only business out of the three businesses that's not EBITDA profitable. Now, in other news, there was two companies, US News as well as NerdWallet, two big publications that show off a lot of financial institution information, okay? It's good for getting our name out there, that showed off SoFi being the #1 players in both personal loans as well as student loans, actually achieving their highest ranks whenever it comes to the way that, these companies review different financial institution products. Now, this isn't going to make or break SoFi, but it's just an additional amount of information that potentially is going towards email lists or YouTube channels or anything along these lines that can spread the SoFi word. Also helps the new members that are to come that we don't already have. And then in last but certainly not least news, okay, SoFi's Anthony Noto, CEO, bought even more shares. Now, I changed this chart around just a little bit. As you can see, I've just, added this up here at the top. I've just consolidated all of his March purchases while also still keeping in his May purchases. He didn't make anything in April, and then having his June purchases down there. And just in these last 5 purchases, which has happened in the last 10 days, okay, you're talking about spending more money than what he's made on his entire salary from SoFi of all of last year. Now, I've added some information above my head, as you can see, just to show you a more of a broader picture of Anthony Noto's entire holdings, how many shares he has, as well as what this chart is actually telling us in terms of how much he's buying. Now, whenever you're actually looking at that 12.7% on that list, okay, that's the most important part because that's not including stock-based compensation. That's just talking about from March to June. In 3 months, he's added over 12.7% of his entire overall portfolio. That's a huge amount for someone that's holding over $20 million in a single stock to add in 3 months. So there goes all the bears that is just saying that he's putting in money just to add confidence into this stock, and it's just peanuts for him, okay? He's starting to pour in some real money now. I mean, if you're talking about his SoFi salary of him taking home around $750,000 per year, you could fit a lot of years into his $2.9 million that he's spending. Now, I probably don't need to tell you why this is so important that he's buying this stock, but I will anyway. It's because he's confident in the own company that he sees insider information on. And although he might not be acting on insider information, okay, or that's not what he's disclosing to the SEC, he's definitely not pouring his money into a business that's going to be showing a terrible quarter next quarter. He knows by now that him buying this stock does not move the price of the stock at all. People have just not seemed to care at all what he has to say about this company, although I do. It's important to me that what he's doing, especially at the rate at which he's doing it, really does show confidence from a perspective of this company that we as just normal investors cannot see until the actual quarter comes out. I'm bullish on SoFi. I'm bullish just on the short term in Q2. And you already know, if you've been watching, I'm especially bullish in the long term, okay? I'm extremely excited about this company, and you can see why if you just check out that video right here. But if you haven't already, make sure you guys like the video and subscribe down below if you want to see more financial content just like this.